Um, Greetings once again. We welcome you to Accounting Tutorials for You. In this lesson, we are dealing strictly and specifically with grade 10 accounting. The topic at hand is accounting equation. Now let's break down what does the accounting equation basically tell us. The accounting equation tells us that the total assets of the business must be equal to the combination of the owner's equity of the business and the liabilities of the business. So in this particular lesson, we are going to deal with transactions that affect, or rather that are done by a sole trader business. But now, the key point and the key disclaimer in this instance is that this sole trader business is not registered for VAT, value added tax, which means we are not going to have input VAT or output VAT in all of our transactions. And of course, accounting equation with transactions that have VAT implications is going to follow perhaps in the next video, right? Now, let's first break down our terms just a little bit, right? So we have your assets. Your assets is those resources, all of the resources that are going to help the business make money. That is, your furniture, your computers, your cars, and so on. Then your owner's equity, it's basically how much the business is worth. How much is the business worth is determined by striking the difference between what the business owns, which is the assets, minus what the business owes, which is the liabilities. Which means our liabilities are our short and long-term debts. Everything that we owe, that is our short-term loans, our long-term loans, our mortgage loans, and so on and so forth. All of those are our liabilities. Okay. Also, there's a couple of components that affect our owner's equity. Our owner's equity is increased by capital. It is also increased by our income. It is further decreased by our drawings that are made by the owner, and it is also decreased by expenses. Right. With that said, let's go to our transactions. The first transaction is that the owner of the business made a capital contribution of 50,000 rands cash. The owner made a deposit into the bank account of the business, basically, which means if the bank account of the business is receiving money, our assets are increasing. So we come to our assets and say plus 50,000. And of course, the account name is called bank here. What is this money in the bank that we are receiving for? We are told that the owner was contributing capital. We said our owner's equity is increased by capital and income, which means we come to our owner's equity and say plus 50,000 rands, and that's for capital. That's the account affected, capital. Nothing is happening to our liabilities. Transaction number 2 tells us that the business purchased trading inventory to the amount of 15,000 rands via EFT, an electronic funds transfer, which means this transaction was made cash because money did leave the bank account of the business. If money is leaving the bank account of the business, that means our assets are decreasing. So you come here, you say minus 15,000 rands. Why is this money subtracted here? It is because our assets are decreasing. We took money out of our pocket to go and buy inventory, right? So the minus is for what? Is for bank, right? The minus is for bank, right? How did we buy this? Rather, we said the minus is for bank, right? What were we buying? We were buying trading inventory. Is trading inventory an owner's equity, a liability, or an asset? Trading inventory is going to help us to make more money. So that means trading inventory is an asset, which means our assets are increasing through trading inventory. Plus 15,000 rands. The account affected here is inventory. Right. Which means to our owner's equity and our liabilities, there's no effect. Nothing is happening. Let's go to transaction 3. The business received commission income of 5,000 rands. The business received into the bank account commission income of 5,000 rands, which means our bank account is increasing. When our bank account is increasing, our assets are increasing. So plus 5,000 rands, this is into the bank, right? What is this money in the bank for? It's for commission income. We said our owner's equity is increased by capital contributions and income, which means we come to our owner's equity, we say plus 5,000 rands. It's commission income. That's the account, commission income, right? Nothing is happening to our liabilities once again. Let's go to transaction 4. The business purchased a delivery van on credit for 100,000 rands. We bought a delivery van. We said our cars, our land and buildings and so on, those are our assets. So when you're buying a car, that means our assets are increasing. So we come here, we say plus 100,000 rands, and that is for your vehicles. This is for our delivery vans. And then how did we buy this vehicle of ours? We bought it on credit, which means our liabilities are increasing. So plus 100,000 on our liabilities, and the account affected is called creditors control. Creditors control. Nothing is happening to our owner's equity. Let's go to transaction number 5. Transaction number 5 tells us that we received rent income of 10,000 rands. We received money into our bank account, so it's gonna be plus 10,000 rands, and of course this money is coming into the bank. And of course, what is it for? This is for rent income, which means our owner's equity increases here by 10,000 rands, and of course it's rent income. Nothing is happening to our liabilities. Let's go to transaction 6. We received a loan of 25,000 rands from ABC Bank. We received a loan, so which means we owe ABC Bank, which means our liabilities are increasing. Plus, we received a loan of 25,000 rands, so plus 25,000 rands on our liabilities. It's a loan, right? Now, this loan is in the form of cash. If it's in the form of cash, that means this money was deposited into our bank account. So you come to your assets, you say plus 25,000 rands. This money came into our bank account. Nothing happened to our owner's equity. Transaction number 7. We sold inventory with a cost